Picture this. You go to the mailbox on a normal Tuesday and you pull out a letter from the IRS that says your business is getting audited. As an S Corp owner, one of the things that they ask you for is proof of your reasonable salary that you paid yourself, and you need to be able to defend that reasonable salary. But did you make the one mistake you shouldn't make when it comes to setting your salary? If you're curious what that mistake is, then I've got a great conversation coming up here with my friend Abbie Deaver from RCReports. And we're going to talk about what the do's and don'ts are when it comes to setting your reasonable salary to make sure that it's audit proof. Okay, so I am here with Abbie. I am so excited to have her on. Abbie is from RCReports, which is a company that I actually partner with related to reasonable compensation. And so, Abbie, why don't you take a minute to introduce yourself to the channel?
Sure. Very excited to be here, Jamie. So I lead marketing at RCReports. I've been leading marketing for B2B SaaS companies for just over 12 years now. Most of that time I have spent in the accounting industry. So I do really love educating accountants on new tools and techniques to help them run their practice. And over the last several years, being with RCReports, really one of our main focuses is to educate business owners and accountants on what reasonable compensation really is and how they can accurately calculate this figure so that it's defensible if they're ever in a position where they need to defend that number. So it's really become a passion of mine over the last few years, and I'm excited to talk about that today.
Yes. So this is a passion subject for me. So I have a few things that my audience knows, like I will get on a soapbox about certain things. It's tough to get me off that soapbox, but S Corps and the rules around S Corps and reasonable compensation specifically is absolutely one of those areas. And so this is why when I first heard about what RCReports does, which I'll get to in just a minute, I was stoked. I was like, sign me up. I need in on this immediately. My audience needs this. And so that has been just a wonderful partnership that we've been able to have. But I want to jump in first because this is all about this specific video we're doing is all about the one thing you shouldn't do when it comes to reasonable compensation. So if you are an S Corp owner and you're needing to set reasonable compensation for yourself as required by the IRS, right? You have to pay yourself and withhold taxes and all the things. What would you say, Abbie, is the one thing, if we have to boil it all down, that you should not do when it comes to reasonable comp?
So having worked with business owners and accounting firms over the past couple of years on reasonable compensation, I would say without a doubt, the number one thing I would say don't do is to take your advice solely from TikTok or your best friend's uncle's neighbor or a random thread that you read on Reddit. Make sure that you're doing your own research and making sure that you're using sources that really understand the topic of reasonable compensation.
Yes.
It's an area where there are a ton of myths and misconceptions floating around. And if you take bad advice, it can definitely get you in some hot water. To be honest, I don't necessarily blame the TikTokers for it because even reputable sources get this wrong. Look, here at RCReports, our most recent survey results show that up to 70% of accountants still believe one of these myths or misconceptions about reasonable compensation. We've surveyed over 10,000 accountants at this point, and that's where we're at. We are, good news, seeing that number go down a little bit as the years go on. So more and more accounting professionals, yes, are being educated in this area. But the good news is that you're here. You're watching this video. And me and Jamie today, we're going to set this record straight so that you can confidently set your reasonable compensation according to IRS rules and regulations, which is really the.
And I think that that's such a good point that you make, right? You might be getting advice from TikTok. But again, I mean, we all, those, the videos come up, they're interesting. We're like, ooh, I'm curious about this, right? Now it's fine if that's like the jumping off point, but taking that step to figure out, okay, what are the rules and regulations? I'm not just going to take this, the one I always joke about on TikTok is like, you can buy and write off a Range Rover and get a free car. And I'm like, oh my God.
Yeah, but research that a little bit more before you do it.
Yes. Please research that. Talk to somebody who knows about it. But to your point, even accountants are getting this wrong. And it's not because of anything other than the fact that there is there are so many misunderstandings of the actual rules and things that kind of were rules of thumb that became almost treated as guidance that isn't guidance. So we're going to talk about those myths. Let's jump into what some of those more common myths you see on social media or potentially even from accountants sometimes that you guys have surveyed. So what's kind of number one that you see?
So the first one that I want to talk about is really kind of starting at the beginning. So I see a lot of misinformation about who should be an S Corp, right? A lot of people online are making these vast claims like, if you make $60,000 a year, you should be an S Corp. Or they'll make a blanket statement like, every LLC, you should just be an S Corp because you'll save money on taxes. One rule of thumb I like to say is if somebody's making a blanket statement when it comes to S Corps or reasonable compensation, that's your red flag that you need to do more research and probably don't take their word, right? Because when it comes to reasonable compensation or it comes to should I be an S Corp, the answer is it depends, right? There's no one size fits all answer for these questions.
Yeah.
And Jamie, you talk about this a lot. There's so many factors that come into the decision of whether you should be an S Corp. You're not automatically guaranteed to save on taxes just by filing as an S Corp. Such a common misconception.
I see so often, I mean, even in my Facebook group, we've got tons and tons, thousands of women business owners in there. And I've seen people say, oh, my tax accountant is saving me $30,000 by being an S Corp. And I'm like, let me see the math. I just want to see the math, right? Because I think there is this misunderstanding of, okay, I'm like, are you doing it correctly? Are you paying yourself a reasonable salary? How are we getting to this amount? And I think it got even more complicated. I think where some of this, if I am to try to go back with, accountants and those rules of thumb, right? We like them. They're helpful. But to me, what I say, instead of having a rule of thumb of be an S Corp over this amount or don't, it's start analyzing it. Go have an analysis performed maybe once your profit hits $60,000, $70,000, $80,000, right? That's not the time that it necessarily makes sense, but that's a good time to start talking to someone and having them do a full, not a back of the envelope, right? A full analysis based on you, your business, your needs. There are a lot of details that they should be getting from you to determine whether this makes sense, not just your business profit. So I 100% agree with you. And I think some of it too is with the passage of the Tax Cuts and Jobs Act, that's where a lot of stuff changed and it got more complicated. And a lot of accountants are not, have not necessarily updated their methodology for making that determination. I've seen people who have $10,000 in profit, their accountant set them up as an S Corp. I've had so many stories of that. And it's really just, yeah. And they don't tell them, there's extra stuff you got to do. There's a cost to it as well. Not to say it isn't worth it under the right circumstances, because it definitely can be. Okay.
Absolutely.
So that's myth number one, right? Which is, if you're above X amount of profit, revenue, whatever, you should be an S Corp, right? Correct. What is myth number two you see a lot?
All right, so you're already an S Corp. Now we're moved on to you have to take a reasonable compensation or a reasonable salary as W-2 wages. Okay, so one of the most commonly cited myths that we see is somebody says, well, you just use the 50-50 rule, or sometimes you see it cited as the 60-40 rule, which is basically decide how much you want to take out of your S Corp. Let's say you want to take out $100,000. You're just going to take 50% of that as W-2 wages and 50% as distributions. This is, again, it's just a blanket statement, but it's wrong. And I'll tell you why. The IRS defines reasonable compensation as the value that would ordinarily be paid for like services by like enterprises under like circumstances. Mm-hmm. So what does that mean? There's kind of two ways that we like to think about it here at RCReports. The first is replacement cost. Think about if you, as the S Corp owner, were to leave your business and you needed to hire somebody to come in, or maybe multiple people, to come in and to do all of the tasks that you do on a daily basis. What are you going to pay them? That's one way to think about it. The other way to think about it is if you as the S Corp owner left your business and went to go look for a job somewhere else, where again, you're going to do all the same tasks that you're doing at your current job, at your current business, what would you expect them to pay you, right? What would you expect the market rate for that to be? So when you think back to this rule of like 50, just take 50-50 distributions and wages, where is that taking into account the services that you're actually performing for your business? It doesn't, right? It's not taking into account the value of the services performed at all.
Yeah.
It's incorrect.
And I think that's an example of that would be, you know, some people, I know somebody that at 40,000, they said, oh, I heard at 40,000 that it can make sense. And the thought process behind that is, okay, if I'm making $40,000 in profit and I do the 50-50 rule, let's do the math. I like to have the math. So if I do the 50-50 rule and pay myself 50% salary, meaning $20,000. Now let's say you're working full time. You're in your business full time. $20,000 is what you're going to pay yourself for that full-time job. And then the other 20% or the other $20,000 or 50% is your dividends. Doing the back of the envelope, which again, I don't recommend, but that means 20,000 times the savings, 15.3% savings, Social Security, Medicare, et cetera. You might say, okay, you know, that's a $3,000 savings in taxes. I should do it. And you might look at that and be like, yeah, well, who doesn't want to save $3,000? Well, first of all, how are you going to support that you working a full-time job, that $20,000 is what, if you had to hire someone to come in and do your full-time job, you could pay them 20 grand for that. You're probably not going to be able to, even though you could say, but the 50-50 rule, the IRS will say that's not a thing.
It's not a thing. It's not how the IRS defines reasonable compensation.
No.
They don't care that you saw it on TikTok, right?
Mm-hmm. They don't even care that your accountant told you. They don't even care about that, right?
They don't. They do not.
So I think that's one of those places where, you know, some of this, that's where some of those lower thresholds can come in. But again, you have to be able to support this reasonable compensation that you're paying yourself, right? Okay. Absolutely. Number 3, what else you got?
All right. So another one that we see a lot is to set your compensation at the Social Security maximum. Just set it there at the maximum. You get all your Social Security, so you've maxed out that benefit, right? And then you can take out anything else as distributions.
Yeah.
The Social Security maximum this year is $168,600.
Yeah.
Right? So again, the first thing you should do when you hear these kind of approaches thrown around, go back to that definition of reasonable compensation. Where is this taking into account the value of the services performed?
Yeah.
It's not, right? It's an arbitrary number that we're choosing for a reason, right? So that's your first sign that not the best way to set this number.
Yeah.
But as we kind of talked about earlier, that's a pretty high number for salary. You could be losing out on a lot of tax savings by just defaulting to set your salary that high. What if you do an analysis, which we'll talk about later, and it says that your salary should be $100,000? That's a lot of tax savings.
That's a lot of tax savings. And so I think that's something that I've seen before as well. And my answer is usually, now maybe that's correct. That could be too high. That could be too low. That could be any number of things. But I would worry that if you're paying yourself especially too high, you're overpaying in taxes and you're really losing the benefit of being an S Corp, because the benefit of being an S Corp is saving on Social Security taxes. If largely, right? Like that's one of the main benefits, pretty much the main benefit from a tax perspective. If you're maxing out Social Security, okay, what are you saving at the end of the day, right? Like you've got a little bit in Medicare, okay, great, but you're missing out on that tax savings, which really comes between that, you know, whatever your reasonable salary is and the Social Security max. So again, you may say, you know what, Social Security is really important to me. I want to pay in as much as I can to that. Maybe it doesn't make sense for you to be an S Corp then, right? In some instances, maybe you should just be an LLC and then you don't have to deal with all the hullabaloo that comes along with it.
Exactly right, because there's so many other things that you have to do once you're an S Corp that you don't have to do if you stay in LLC. So this is why we're here really telling you you've got to make an informed decision before you make that election, and really understand these different topics that go into reasonable comp.
Yeah, so I think if I am to sum up kind of the myths we've talked about, it's we don't take advice directly from TikTok, we don't take advice from social, even advice from accountants. We're kind of sense checking about what we're hearing, making sure to ask additional questions, making sure a full analysis is being performed, that being an S Corp makes sense for you. And then let's talk about with reasonable compensation, specifically with RC reports and what y'all do. This is what I love, the importance of having that documented. So tell us a little bit of a story, Abbie. You said you had a good story for this, so I'm going to let you tell it about documentation and the importance of it.
Yeah, absolutely. So, right, there's the importance of getting the figure correct and accurate, just as important as documenting the figure. So I'll tell you the story about Nancy. Nancy is a nail salon owner in Florida. She's an S Corp. She rents out booths to other nail techs. She pays them via 1099. It's a common and it's a legal arrangement in that industry, right? With her accountant's guidance, she sets her reasonable comp at $40,500 because it feels right, and she moves on, right? A few years later, this is a real story, by the way, somebody used RCReports in this audit. So a few years later, her company was elected for audit by the IRS's Specialty Examination Employment Tax Program. This is the one that focuses on employers paying employees via 1099 instead of W-2, right? So that's what triggered the audit. Now, like we mentioned before, she was doing that correctly. She was following the rules. She passes that part of the audit, no problem. The auditor comes in and says, oh, you're an S Corp. So by the way, while we're here, we're going to go ahead and look at your reasonable compensation.
Which they will always do.
We call them, by the way, audits lovingly here at RCReports. But if you're an S Corp, a lot of times something else will trigger the audit. They see you're an S Corp. They're also going to look at your reasonable comp. It's low-hanging fruit for them. They're going to do it. Mm-hmm. And so the examiner comes back because, again, she didn't have it documented, right? The examiner comes back and says, I think your reasonable compensation should be $67,000. This is a difference of $26,500 from what she had been paying herself. Now she's looking at taxes, penalty, interest in the realm of $10,000.
Yeah.
It's a lot of money.
And it can add over multiple years, right? Yeah.
This is just 1 year. And a lot of times they're going to come in and look at multiple years.
Yeah.
So the accountant that she was working with during the audit was different than the one who set her reasonable comp originally. And this accountant knew enough to ask the examiner, hey, can I see the data and the method that you're using to calculate this figure? Turns out the examiner was using the cost approach, which is one of the approaches that you'll find in RCReports. It is one of the IRS approved approaches, so it makes a lot of sense. However, when Nancy got the report from the auditor, she noticed that the examiner was making some incorrect assumptions about how she was spending her time, right? And so that was what was causing the auditor's figure to be inflated. So Nancy and her new accountant came, they got an RC report, which used the cost approach. She was able to document how she actually spends her time in the business. She was able to provide that to the examiner. The examiner accepted it, said no change letter on that, good to go. Here's the thing. While in the end, she didn't have to pay those back taxes, penalty, interest, she's paying somebody to represent her in that audit. She's paying for a report that she had to get done very, very quickly, right? It was her time spent as well as her money. And, if she wasn't working with an accountant who knew about RCReports and knew how to handle that situation, she could have ended up paying that $10,000 that the IRS originally said that she owed. So this is the importance of making sure that you have it documented every year. Wage data changes every year, and just being proactive about it. We have a saying here at RCReports, the first to the table with a fact-based figure wins. Now, Nancy was able to put her own facts in and win, but it would have been a lot easier if when they ask, you just slide that report across the table. Every time we hear about that happening from our clients, it's just that the auditor goes, check, you're good, they move on.
Yeah, because at that point, you have an actual approach. You have shown, look, I've already done this work. Here's how I've supported this. Here's how I came up with it. And most of the time, these IRS auditors, of course, they're going to ask, because usually they're not going to get a good answer back, right? So few owners are actually doing the work to have this documented, that if you have the documentation, if you've gone in and said, this is how I spend my time, and use something like RCReports, which generates this amazing report with all the charts and graphs and all they average out the salaries, and it's absolutely incredible. It's why I partner with them. But If you have that, they're going to be like, oh, wow, okay. And they're going to move on to the next, right? And so I think that's what I love about it so much. And you don't want to wait until you're in that situation and you're scrambling and you're having to, be represented to the IRS and all of this. You want this to be just a check the box, great, let's move on type of thing. And so that's why I highly recommend anyone who is an S Corp owner gets a reasonable compensation study and report done every year. It's one thing that I offer. I work with RCReports, partner with them because they are the experts in this to offer this to my audience. So if you're a small business owner and you're like, oh my gosh, I probably need one of these, I'm going to put the link to go grab yours below. And I actually review each and every one of them to give you my thoughts from a CPA's perspective as well. So I want to make it super easy for everybody to get this done. You don't have to get on the phone with me, right? You don't have to do all of that. It's very simple and easy process for everybody, but I absolutely love it. And my audience has loved RCReports. Most of my audience who gets them, they come back the next year. They're like, okay, I need an update. Okay, I need an update. It's so wonderful.
Awesome. That's amazing to hear. We definitely recommend working with an accounting professional like Jamie or your own accounting professional to get these reports done. They can offer some guidance. Jamie certainly is an expert in reasonable comp herself at this point. So I've seen lots of her videos. She definitely nails it. And so definitely encourage you to have that conversation and just get this squared away. Like Jamie said, it does not take a long time. Just get it done, check it off.
And this is one of those areas Abbie and I are we're so in sync on our passion over this. So we could probably talk about it for a long time. Yes. I'm not going to bore everybody with it, but just know it is super important. And the other question I was going to ask you, Abbie, too, is what are you seeing with regards to the IRS? What are they actually? You told the one story, which is, I think, a great indication of the importance of documentation. But what are you seeing that gives you an indication of what their focus is going to be on reasonable compensation coming up?
Yeah, absolutely. So with the passing of the IRA 22, of course, the IRS now has more funding. They've been pretty clear with their intent to use a good portion of that funding on enforcement, on compliance, right? And last year at Payroll Org's annual Congress, they had two IRS executives speaking about, well, how exactly are you planning to use this money for enforcement, right? Enforcement is so broad. Can you be more specific? And so in this conversation that these IRS executives had, they said, of course, ERC is the top focus. Once we get that squared away, there's some other
retention credit for those of you who also watch my channel. I have videos on that too and lots of thoughts.
Yes. So number one, so definitely make sure that if you have anything going on with that, you get it squared away.
Yeah.
Once they're done with that, they listed out a couple of other areas of focus, and they specifically said S Corp owner reasonable compensation. That is an area of focus for the IRS. The second thing that we saw at the end of last year that really backs up that this is an area of focus for them is on the CP 261 notice. Now, the CP 261 notice, if you're not familiar with it, is the letter that you get sent when your S Corp election is accepted by the IRS. So if you file for the S Corp election, once the IRS accepts that, this is the letter that you receive in the mail. And what they did at the end of last year was they actually added a section to this notice that specifically talks about reasonable compensation. It's a little, remember, when you make the S Corp election, you're an S Corp now, you have to pay yourself reasonable salary via W-2 wages. And it gives some outline about reasonable compensation. So when you kind of combine those two things together, this is really probably as clear of an indication as you're ever going to get from the IRS that something is an area of focus for them on compliance.
Mm-hmm. Absolutely. And so getting, again, that documentation, let's not wait until the back end, right? Let's not scramble. Let's be prepared. Let's be proactive with this. So a couple of resources I want to mention. First of all, everybody go check out, you can check out RCReports, especially if you're an accountant and you want to offer this to your clients, then go check out RCReports, check out what they're all about. There's lots of great blogs with stories that I love over there that just give you an indication of reasonable compensation, talking about some of these myths, that kind of thing. If you're a business owner and you want to learn more about reasonable compensation, turns out I am doing a live masterclass on it. So that is coming up. This is the first time I'll do a full live. So we talked today about some of the myths. We're going to talk more about how to do it right? So this is all about the savvy S Corp owner getting salary right. And so I get to stay on my soapbox a little bit longer, but we're going to be doing that coming up soon. So definitely go check out the link below to sign up for that masterclass too. And then I also have an S Corp toolbox. So you can check out my S Corp toolbox, which talks about some of the things Abbie talked about towards the beginning of, should I even be an S Corp? If you're not sure, or if you want a refresher on the rules, because maybe you are one, but you're not sure what you're supposed to be doing, S Corp toolbox is a great program for you. Or if you're just like, I just want one of these RC reports. I need this for my business. You can definitely find that link below too, which is jamietroll.com/RC reports, where I will, give you all the things that you need to be able to do your study. And then I will review it personally myself and give you thoughts and feedback. And because we really want to get it in the sweet spot, right? We don't want to be too high. We don't want to pay too much taxes. We don't want to be too low. We don't want to get in trouble with the IRS. We need to find kind of that sweet spot of what we can defend and have that really great IRS defensible proof for it. So thank you, Abbie. Anything else you want to add before we close?
No, I think just for the business owners, for those S Corp owners out there, this is really something you need to do every year. Get it from Jamie, get it from your accountant, get it from RC Reports, but please get it documented, get it correct. So that's what we're all about, helping business owners do.
Absolutely. We're super passionate about this. So go forth and do your reasonable compensation calculations. All right. Thank you so much for joining me, Abbie. I've got all the links down below. So go check all of those out and we'll talk soon.
Thanks, everybody.
So I hope you enjoyed that conversation with Abbie as much as I did. We really have a passion for the area of reasonable compensation and the importance of making sure to set it well. Now, please do not miss the masterclass I have coming up. It's called the Savvy S Corp Owner, Getting Your Salary Right. We are not only going to talk a little bit more about the things not to do, but we're really going to go into what to do instead. What are the true best practices and what are some more real life IRS audit stories for you to be aware of? To sign up, just go to jamietroll.com/salary and claim your spot. Now, if we've convinced you that having this documentation is a great idea and you want to know more about the reports that I offer, go to jamietroll.com/RC reports, and you're going to be able to see a sample report and read about what we do and how I can help you set your reasonable compensation. And if you currently have inconsistent income in your business and it's making it tough to actually set a reasonable compensation, well, definitely check out this video that I recently did all about managing with inconsistent revenue in your business. Thanks for joining me. Like and subscribe, and I'll see you soon.